Thank you so much for joining me on the show today, Jolomi. I would like you to start off by speaking on what we've seen and how the COVID-19 is impacting the equities market in Nigeria.
Okay, thank you for having me, Kenneth. Okay, so for the market, the impact obviously has been quite negative as investors are taking into account the sort of impact you expect to see on businesses. Now, what we've seen so far is that more than likely economic activities are going to decline quite significantly, and the companies in the markets will not be immune from this. So whereas at the start of the year we had expected the economy to grow about 2.21%, we are now forecasting about 0.65%, and that's based on an optimistic view that we will not be shut down for very long. And this has impact on the company, this has impact on dividend disbursements, and so that's what is really playing in the equities markets as of now.
All right. Yesterday, I was speaking to an analyst and talking about, how this is the COVID-19 is impacting the market and what sort of catalyst we might need, to help to, improve the performance we're seeing in the market. We saw the Q1 figures coming out there from the markets, really not looking so good. But the analyst was on the view that, until we start to see the curve flatten a little bit on the amount of cases coming in on Nigeria, and we see that kind of window, that he believes that might lead to an upswing in the market. And do you agree to the sentiment?
Sorry, I didn't get the last part of your statement.
All right, so I was saying that do you think that the right catalyst we might see in the market is probably when we see the global cases flattening down, and also locally, we're seeing the numbers come down on the COVID-19 cases. Do you think that could lead to give the market the right impetus to start bringing out more positive figures?
Yes, most definitely. If you look at what's happening globally now, equity markets are down, fixed income markets are down, even safe haven assets such as gold is down. So what you have is that there's quite a lot of tension in the market at the moment, and so people are holding cash. Investments are quite weak, and it's similar here. People rather hold cash in some instances. So when you have cases flattening, when you have possibly a vaccine or some sort of measure put in place to really control all we're seeing, there needs to be a catalyst for the market. There are other issues to worry about in the lead up to that. For instance, the impact on oil. Yes, we've seen quite a rally in the price of oil over the last day, but that impact seems to have far-reaching implications for the Nigerian economy, and so we're going to have to see some monetary measures put in place to actually, cause investors to come back into the market en masse, so FPIs to start to flow significantly again. In which case, we might start to talk about currency adjustments. But for now, the major catalyst you will see, or we would expect, is that there's sort of an ease in the number of cases globally, and the number of cases in Nigeria doesn't spike significantly. That would be positive for the market, and we might possibly see the market returning to positive closer to the end of the year. Right now, if you think about everything that's happened, I think we might be looking at quite a shift in consumer behaviors, which means that we might not see that rally as soon as everything maybe normalizes.
All right, then. Thank you so much for your contributions on the show, Jolomi. Definitely we'll keep an eye on looking at for what that catalyst could be that could help the markets to improve. I've been speaking to Jolomi Odonghanro. He's the head of research at Cordros Capital.